Oh, there was a time when investors were hesitant to hold on to their Tesla stock, and many did not buy the stock because the average Tesla stock return did not look great in the short term. But things have definitely been changing. According to Webb Bush, managing director and senior equity analyst, Tesla is the best performing stock in the consumer discretionary sector in the first quarter. Do you see these new rules as the Treasury lays them out as a catalyst for Tesla and maybe the EV producers writ large the sector as a whole from here? According to Dan Ives, Tesla is expected to surpass this year's delivery consensus. Learn why he is extremely optimistic about Tesla stock as well as what to anticipate in the upcoming months. Welcome back to Tesla Tomorrow, everyone. Ives is a leading Wall Street analyst and a Tesla bull. Tesla's stock might rise 35% this year from its current price, according to the stock research that was previously published. Dan Ives claims that cuts have already been a big success in China. Recent significant price reductions from Tesla are indicative of its current success story. He went on to say that China is at the center of the Tesla growth narrative globally and that EV buyers seem to have reacted well to the price reductions, hastening their decision-making process. According to the stock study, Tesla's price reductions are a noteworthy indication that the business is becoming more assertive as the EV market becomes more competitive. Why does Dan's eye feel that Tesla will exceed the consensus for this year's delivery? You'll find out if you keep watching, but before we do, please hit the like button, subscribe, and enable notifications to stay informed about all things Tesla. Nearly every significant legacy carmaker has now established an EV plan or is actively building one, a testament to the complete disruption that Tesla has caused in the automotive industry. In spite of being a much bigger firm now than it was a few years ago, it has also maintained a very high top and bottom line growth rate. Despite record deliveries in the first quarter of the year, nearly 423,000 vehicles, Tesla stock recently fell by more than 6%. Although some experts might have expected more in light of the most recent price reductions, the car company estimates figures. According to many analyses, Tesla did not surpass the consensus, particularly the one that ordinary investors in Tesla stock had in mind. There were even more agreements in some cases. For example, Tesla bull and billionaire Leo Cargo, a longtime Tesla supporter and stock investor, were at 450,000 deliveries, while Ross Gerber, another Tesla bull, was even higher. Still, most analysts will concur that Tesla outperformed the Wall Street consensus. The topic of discussion right now is Tesla's margins, which should become available to the public on April 19. Right now, Tesla is getting better, and its stock is doing really well. Thus far, in the first 3 months of this year, the stock price has doubled. Analysts had already forecast that Tesla stock would drop as low as $60 in January. The good news is that Tesla stock is currently 10 times above, contrary to certain estimates that said it would still be higher in a recession if it was only $20 per share. The cost of this year's Tesla delivery number is $1.8 million. Although 1.8 million deliveries remain the focus of street investors, Tesla appears to be either on track or even ahead of that pace based on its current performance. Rather than being merely a conventional automaker, Tesla can be better defined as a disruptive technology player. The automaker should be seen more as a tech firm, even though it may be compared to companies like Toyota or others. This is evident in the stock, particularly in the previous several months. But the main worry is that Tesla needs to keep coming out with more inventive products because they are held to a higher standard. For example, not every competitor of Tesla can take the same route that Tesla has taken. Although Toyota claims to be putting a lot of effort into EVs right now, it's unclear what strategy it has in place to make this happen. While speaking about Tesla's price reductions, a number of groups have asked that Toyota switch to electric vehicles, EVs. The question is not whether Toyota needs to switch to EVs, but rather how it will accomplish it. Dan, as I've mentioned, Tesla's current price reductions are undoubtedly boosting sales, and more price cuts are being discussed. Because of its margin structure, which gives it far more flexibility than other EV companies to implement price cuts, there are discussions about whether Tesla will need to implement additional price reductions in China or even in the US as the EV arms race plays out. This may remain the case, particularly as battery costs eventually decline over the upcoming months and years. Dan Ives appears to be one of the few analysts who truly gets Tesla stock. The majority of other analysts just don't get it and are too short-sighted to grasp the big picture in the long run. With a larger fraction of the auto market to its credit, Tesla will probably be able to take advantage of increased economies of scale for the automaker. this will stop other competitors from entering the market because if Tesla already has ludicrously advanced economies of scale, then any newcomer will be able to offer cars that have been on sale for significantly less during the last 5 years. While investors may have been somewhat irritated by the previous stock price decline, Tesla stock has been rising dramatically, and even though many people are finding it difficult to perceive the potential prospect, a better future is undoubtedly in sight. This might eventually become a positive margin story since the company, which has been delivering hundreds of thousands of automobiles, continues to promise to supply more at lower rates. However, given that certain Tesla rivals are beginning to attract the interest of large investors, there may be some competition in the stock market. Over 90% of Lucid Motors shares increased as a result of rumors that the public investment fund in Saudi Arabia was considering acquiring the business. California-based company's shares have increased by more than a third since January 23rd, ranking Lucid as the sixth most traded stock on the Nasdaq and the third largest gainer. Consequently, if the PIF does wind up purchasing Lucid, this would draw additional attention to the firm as investors wishing to invest in EVs might think about doing so rather than Tesla, which is presently the top EV manufacturer in the world. The Tesla investor stated that Dan Ives has not always supported Elon Musk's decisions, particularly when it comes to Twitter. At one point last year, the investor expressed concern about the significant dangers that Musk's increased focus on staging a turnaround at Twitter was posing to Tesla's shares. He claims that Musk's Twitter initiative has become a circus act that sparks controversy almost every day. Recently, Elon Musk revealed that Twitter is heading towards profitability, which might indicate a number of things. Given that Musk is less likely to sell Tesla stock in the future, this could be advantageous for Tesla and its investors. As has always been the case with social media platforms, monetizing Twitter will undoubtedly be a bit of an uphill battle. After all, Elon Musk paid $44 billion for a company that is thought to be worth closer to $20 billion. On the other hand, there are a lot of intriguing things going on the platform. When Twitter Blue, its subscription service, launched at the end of November, users could expect to pay a monthly charge to access extra features including an edit button, increased visibility, and fewer adverts. Right now, Musk might be the greatest person for Twitter. Rival social networks arose and had rapid development, while Twitter's user base and ad revenues stagnated for a spell. The business is well known for being small and powerful, but social media guru Matt Navarra claims that this does not translate into financial success. Elon Musk is a master of PR spin, innovation, and inventiveness. He also doesn't back down from a fight or a rule break, so perhaps his groundbreaking strategies could turn around this failing company, which he claims was losing $4 million a day when he took control. Elon Musk, the CEO of Twitter, recently fulfilled an earlier promise by briefly changing the Twitter logo to resemble a dog coin. Even if there might not be any big benefits for the business, this does demonstrate that Musk is aware of and eager to implement the changes he said he would make to Twitter. How do you feel about Tesla's first quarter delivery? Inform us. If you'd want to learn more about what Tesla has been up over these past several days, click the next video in the comments box below. Talk to you there.